Thank you for joining us. Welcome to Business Incorporated, coming to you live from Lagos. I'm Chimeze Obi Iwago. Coming up on the show, South Africa credit default swaps, dollar bond yields jump as Finance Minister Pravin Gordhan returns home. Ghana's central bank slashes its benchmark interest rate by 2 percentage points to 23.5%. Plus, war-ravaged South Sudan draws $500 million Nigeria Oranto oil bet. Let's get started. And of course, we're starting with the markets, and reports just reaching us now says that the Central Bank of Nigeria has cut the rate of dollar sales to the BDCs from 381 to 360. Now let's talk to the acting president, Association of Bureau de Change Operators of Nigeria, Mr. Aminu Gwadabe. Good afternoon, Mr. Gwadabe. Hello, good afternoon, Mr. Gwadabe. All right, if you're hearing me, I mean, the CBN has taken yet another step by cutting the dollar rate at which they sell to you from 381 to 360. What would this mean for the market?
That will bring more confidence into the market, and we should expect to see the strengthening of the Naira also quickly, as fast as possible. So it's a good gesture to the BDCs, and we'll continue to also support the Central Bank of Nigeria, as we have always done, to ensure that the value of Naira has been strengthened into the market. We will defeat of speculation, we can assure Nigerians, and also we want to warn that anybody that continues to speculate, that continues to hold the foreign currency, is doing that at a very big loss.
Now, with this development, how much are we likely going to see Naira close at the Bureau de Change market, perhaps
right
today?
Right now, the parallel market before the announcement is about hitting 370 to $1. But I can assure you by tomorrow, we should begin to see dollar below 375. We'll be looking at, say, 360, 365 by tomorrow. That I can confirm.
All right, thank you very much for your time, Mr. Gwadabe. And in other markets, the Johannesburg Stock Index entered the positive territory at intraday after the Finance Minister Pravin Gordhan returned home from an investor roadshow as summoned by the President Jacob Zuma. However, the cost of insuring South African government debt against default hit the highest level in nearly 8 weeks. Now, 5-year credit default swaps jumped 4 basis points to 209 basis points from Monday's close at 204 basis points. Yields in South Africa's dollar-denominated sovereign debt rose across the curve. The yield in the 2026 issue added 5 basis points to 4.7%. And here in Nigeria, the oil share index was in the negative at intraday, down 0.53%. Egypt was up 0.12%, while Nairobi Stock Exchange closed up 0.62% on Monday. In the Middle East, markets were in positive territory at intraday after Asian bourses rebounded, but trading volumes were generally thin. Mass malls added 1.2%, outperforming a flat Dubai index. The index was down 0.21% at intraday. Abu Dhabi's index edged up 0.1%, and Qatar was flat at 0.32%, with Qatar National Bank climbing 0.6%. The Saudi Arabian index added 0.3%. Saudi Automotive, which offers services to motorists, saw unusually heavy trading volume and was the most active stock. It surged 4.7%. Meanwhile, Saudi Arabia slashed the tax rate paid by state oil producer Saudi Aramco, a key milestone in preparing the company for what may be the world's biggest initial public offering. And markets in Europe were in positive territory early today as global investors dismissed concerns over President Donald Trump's ability to deliver with campaign pledges. Let's bring in my colleague at the Frankfurt Stock Exchange, Conrad Busen, to talk us through these. Good afternoon, Conrad. Thank you very much for joining us again today. Now, European markets seem to have moved on from Trump's healthcare disappointment Are the healthcare stocks part of the turnaround we see this Tuesday?
They are part of it, but of course we shouldn't, group those shares of the healthcare sector all in one group and link their movements to the events in Washington in a very linear way. Of course, for example, shares of American hospital operators were reacting much more sensitively to the events last week in the Washington House of Representatives than, for example, the manufacturers of medications here in Germany. What I can tell you is that the damper that Trump's failure with his healthcare bill put on the equity markets was pretty short-lived. Now it looks like investors have turned into a bit of a waiting mode. People are asking what now, what to expect from Trump and his tax reform plan, also what to expect from Theresa May tomorrow. The UK's Prime Minister is expected to send the letter to Brussels claiming divorce from the European Union. All those topics are on investors' minds, and that causes a bit of a waiting mode on equity markets and bond markets.
Now, later in the session, the focus will be on U.S. Federal Reserve Chair Janet Yellen, who is due to speak at the NCRC annual conference at 5:15 p.m. London time. Any new soundbite from the Fed chair?
Well, that's what markets are hoping for, new sound bites, new guidance from the Fed chair. The last interest rate hike in the U.S., which happened at the middle of this month, was very well prepared by Janet Yellen and her colleagues of the Federal Reserve's Open Market Committee, which is, the committee that determines interest rates in the United States. Now, of course, Janet Yellen has the opportunity to further influence, the